with increasing bearish sentiment over the last month. Even if price were to make an upswing approximating these spirals, decisively closing back over 25 is less likely, without daily bullish volume at least getting to 15 million. In the short term, a neutral to bearish posture could be maintained, as long as price consistently closes over 2270. Clearing below this level can lead to more suitable conditions for an acceleration down towards the $20 threshold. Then remember to stay tuned and subscribe for coverage of more charts, along with the rest of the series on the Keltner channel indicator releasing this week. Now on to Ford stock chart, where there is a potential double top pattern that shares the range of its lower boundary with a gap fill area. This presents an obstacle to a bearish reversal range, which would preferably clear below the 1212 to 1195 range within the next 5 to 7 days. Otherwise, confidence for acceleration in selling can decrease and lead to price drifting in the range up to around 1280, moving relatively range-bound, similar to how it was in August and September last year.